Good day everyone. Please, if this is your first time of watching our video, please subscription button and click on the notification button to receive notification from us. Today we are looking at forex trading for beginners. Everything you need to know before you start trading. Let's assume you are a beginner. This video is for you. I will break it down in a simple and easy to understand way, covering key concept, strategies, and beginner tips. Let's get started. Firstly, what is Forex trading? Forex or foreign exchange is the global market where currency are traded. It is the largest financial market in the world with a daily trading volume of over $7 trillion. Unlike the stock market, Forex operates 24 hours a day 5 days a week because different financial centers around the world are always open. People trade forex for various reasons. Number one, speculation, trying to profit from currency price changes. Number two, hedging. Businesses uses forex to protect against currency fluctuations. Number three, international trade. Banks and companies exchange currency for transactions. How forex trading works? Forex trading always involves two currencies called a currency pair. You are buying one currency while selling another. Example, if you trade euros and US dollar, you are buying the euro while selling the US dollar. If the price goes up, the euro is gaining value against the dollar and you make a profit. The exchange rate is influenced by supply and demand, economic news, and global events. Key terms you must know. Number one, currency pairs. Major pairs include euros and US dollars, British pounds and US dollars and Japanese yen. Number two, pipes. The smallest price movement in forex. If euros and US dollar moves from 1.1000 to 1.1005, it has moved by 5 pipes. Number 3, leverage allows traders to control a large position with a small amount of money. Example, with 1:100 leverage, $100 can control $10,000. While it boosts profit, it also increases risk. Number 4, spread. The difference between the buying and selling price of a currency pair. Number 5, lot size. This determines how much currency you are trading. A standard lot is 100,000 units, while a mini lot is 10,000 units. Popular forex trading strategies. Number 1, scalping. Scalping is just a short-term trading that involves making small profits on quick trades, usually within minutes. Number 2, day trading. Opening and closing tradings within the same day, avoiding overnight risk. Number 3, swing trading. This is the holding trades for several days or weeks, aiming for larger price movements. Choosing the right strategy depends on your risk tolerance, time commitment, and experience level. How to start forex trading as a beginner? Number 1, choose a reliable broker. Look for a broker with a good reputation, low fees, and strong customer support. Number two, use a demo account. Practice risk-free before using real money. Number three, learn technical and fundamental analysis. Understand price charts, trends, and economic news that impacts the market. Number four, start with a small investment. This means never risk money you cannot afford to lose. Number five, use stop loss orders. Stop loss order is, a, is an automatic Harley method whereby a trader closes his trade at a set loss to protect your account. Risk management tips for beginners. Never risk more than 1 to 2% of your account on a single trade. Avoid emotional trading. Stick to your strategy. Don't overuse leverage. It can wipe out your account quickly. Keep a trading journal to track your progress and learn from mistakes. This is a basic introduction to Forex trading. If you found this video helpful, give it a thumbs up and subscribe for more trading tips.